Good morning and welcome to today's episode of our daily crypto news podcast. We've got a packed show for you today with several major stories that are moving the markets.
That's right. We're seeing some significant developments in the world of layer one blockchains, as well as some interesting analysis from one of the biggest names in finance.
Let's dive right in. The first story that caught our attention is the launch of Berachain's mainnet, which went live on Thursday. This proof of liquidity layer one blockchain is making waves, and its native token BERA is now trading on major exchanges like Binance, OKX, and Coinbase.
That's right, and the numbers are eye-catching. The BERA token airdrop, which is now live, has a value of over $1.1 billion at Thursday's peak price. We saw the token surge to a high of $14.83 before falling back to around $8 at the time of writing.
Those are some big numbers, and it's clear that the market is paying attention to Berachain. But what's behind this proof of liquidity concept, and how does it differ from other layer one blockchains out there?
Well, we'll be exploring that in more depth later in the show, but essentially, Berachain is trying to address some of the liquidity issues that have plagued other blockchain networks. By incentivizing liquidity providers, the network aims to create a more stable and efficient ecosystem.
That's really interesting. And speaking of competition in the world of blockchain, we've got some analysis from JPMorgan that's worth discussing. The bank's latest report notes that Ethereum is facing intense competition from other networks.
That's right. According to JPMorgan, Ethereum's native token Ether has underperformed Bitcoin and other altcoins in recent months. Due in part to this competitive pressure, the bank also notes that Ethereum lacks a compelling narrative like Bitcoin, which has contributed to its underperformance.
Those are some tough words from JPMorgan, and when you look at the numbers, it's clear that Ethereum is facing some stiff competition. The network's growth lags behind that of competitors like Solana, which is definitely a concern for Ethereum enthusiasts.
Absolutely, but it's worth noting that Ethereum is still one of the most widely used blockchain networks out there, with a huge developer community and a strong track record of innovation. So while the competition is certainly intense, it's not like Ethereum is going away anytime soon.
That's a great point, and we'll be exploring this theme of competition in the blockchain space throughout today's episode. From Berachain's innovative approach to liquidity to Ethereum's challenges in a crowded market, there's a lot to unpack.
And that's not all. We've also got some other big stories lined up for you today, from regulatory developments to market trends and analysis. So stay tuned.
So we were just discussing the recent Ethereum update and its potential impact on the broader crypto market. Building on what we discussed, it seems like Bitcoin is still struggling to find its footing.
That's right. I mean, we're seeing BTC continue to trade below $100 K, and the on-chain activity is just not there to support any kind of significant price movement. In fact, CryptoQuant is saying that Bitcoin is overvalued at this point.
Yeah, and it's not just CryptoQuant. If you look at the overall market sentiment, it's pretty clear that investors are just not that excited about Bitcoin right now. Meanwhile, gold is sitting at record highs and is eyeing its sixth consecutive weekly gain.
That's a great point. I think it's worth noting that gold's performance is closely tied to the upcoming U.S. non-farm payrolls report, which is expected to show a slowdown in job creation for January. If that happens, it could have significant implications for the broader economy and potentially even the crypto market.
Absolutely. And speaking of significant implications, there's been a lot of buzz around a recent tweet from Connor, a well-known crypto researcher, suggesting that Kraken might know the identity of Bitcoin creator Satoshi Nakamoto.
Yeah, I saw that. Apparently, Connor was able to track some transactions from Satoshi-lent wallets to a Canadian exchange called Cavertex. And then Kraken responded with a pretty cryptic tweet saying, "We are all Satoshi."
Yeah, that's definitely a curious response. I mean, it's impossible to say for sure what Kraken is trying to imply here, but it's certainly sparked a lot of speculation in the crypto community.
For sure. And I think it's worth noting that even if Kraken does know the identity of Satoshi Nakamoto, it's not like they're going to come out and say it. I mean, that's just not how this space works.
Fair point. But hey, even if we never find out who Satoshi is, it's still fun to speculate. And who knows, maybe one day we'll get a big reveal and it'll shake up the entire crypto market.
Yeah, you never know. Stranger things happen, right?
Building on what we discussed earlier about the recent crypto scams and controversies, I wanted to touch on a story that has been making waves on social media. It appears that Hawk to a Girl, a popular figure in the crypto space, posted and then deleted a podcast featuring a conversation with some crypto influencers.
I saw that. It was a pretty big deal. Apparently, the podcast was meant to address some of the controversy surrounding Hallie Welch, one of the guests on the show. Welch has been at the center of a crypto scam story, and many were looking forward to hearing her side of things.
That's right. And it's interesting that Hawk to a Girl decided to delete the podcast after it was posted. I'm not sure what kind of backlash they were expecting, but it's clear that they didn't want to stir up any more controversy.
Yeah, and it's not like they didn't know what they were getting themselves into. I mean, Welch has been pretty vocal about her involvement in some shady crypto dealings. Maybe Hawk to a Girl just didn't want to be associated with that.
Speaking of crypto dealings, I saw a story from VanEck that caught my eye. They're predicting that Solana's SOL token could hit $520 by the end of 2025.
Whoa, that's a pretty bold prediction. What's behind their reasoning?
According to VanEck, they're using an auto-regressive forecast model to estimate Solana's market cap. They think it'll reach around $250 billion, which would put the SOL price at $520 based on the current number of floating tokens.
That's a pretty significant jump. I think Sol is trading at around $20 or $30 right now. What do you think is driving VanEck's optimism?
Well, they mentioned that the M2 money supply is expected to grow to $22.3 billion by 2025. They think this will boost the crypto markets and top tokens like SOL.
That makes sense. We've talked before about how the money supply can affect crypto prices. If there's more money floating around, it's likely that some of it will make its way into the crypto space.
Exactly. And it's not just Solana that could benefit from this. If VanEck's predictions are correct, we could see a surge in prices across the board.
Definitely something to keep an eye on. We'll have to follow up on this story and see how it plays out.
Absolutely. And in the meantime, we'll keep an eye on the Hawk to a Girl drama and see if anything else develops.
I want to build on our previous discussion about the growing adoption of cryptocurrencies in the mainstream. We were talking about how institutions are becoming more comfortable with the idea of investing in crypto. Now it seems that even high profile individuals are getting in on the action.
That's right. I'm thinking of a certain former president who's been making headlines lately. Donald Trump's fintech venture, TruthFi, has announced plans to launch its own Bitcoin exchange-traded products.
Exactly. According to reports, TruthFi has applied to register trademarks for 6 new investment vehicles, including 2 Bitcoin funds, the TruthFi Bitcoin Plus ETF and the TruthFi Bitcoin Plus Mutual Fund. This is a big move considering the current regulatory environment.
It's definitely an interesting development, especially given Trump's history with crypto. But it's not just the Trump organization that's making waves. We also have an update on the Tornado Cash developer, Alexei Pertsev, who's been at the center of a high-profilizer money laundering case.
That's right. Pertsev was sentenced to 64 months in prison last year, but it looks like he'll be getting out, at least temporarily. A Dutch court has suspended his detention, allowing him to be released on Friday under the condition of electronic monitoring.
And it seems that Pertsev is already planning his next move. According to a post on X, he'll be working on an appeal and fighting for justice. This case has been closely watched by the crypto community, and it will be interesting to see how it plays out.
The implications of this case go beyond just Pertsev's situation. It highlights the ongoing debate about the balance between regulation and innovation in the crypto space. As we discussed earlier, institutions are becoming more comfortable with crypto, but there are still many unknowns when it comes to the regulatory environment.
Absolutely. And it's not just about the regulatory environment. It's also about the public perception of crypto. Cases like Pertsev's can create a negative narrative around crypto, which can be damaging to the industry as a whole. But at the same time, it's also an opportunity for the industry to demonstrate its commitment to transparency and compliance.
Well, we'll be keeping a close eye on both of these stories as they continue to unfold. The intersection of crypto and mainstream finance is getting more interesting by the day.
That's for sure. And it's not just about the politics or the regulation. At the end of the day, it's about the technology and the potential it has to disrupt traditional systems and create new opportunities.
We've had quite a day in the world of crypto, and I think it's time for us to take a step back and look at the bigger picture. Earlier, we talked about Riot Platforms bucking the trend of weak Bitcoin production in January. That 527 Bitcoin mined is no small feat, especially considering most other mining companies saw a decline in production.
And it's not like the circumstances are getting any easier. With Bitcoin difficulty set to hit an all-time high on February 9th, it's clear that Riot is doing something right, but we have to wonder, what does this mean for the rest of the industry? Are we going to see more companies follow in Riot's footsteps? Or is this just a one-off success story?
That's a great question, and it's something we'll definitely be keeping an eye on in the coming weeks. But in the meantime, let's shift our focus to some regulatory news. We saw a couple of U.S. congressmen pushing to include legal protections for NFTs in a revised crypto bill. What are your thoughts on this development?
Well, I think it's a step in the right direction. The NFT market has been growing rapidly, and it's clear that we need some sort of framework in place to protect both creators and collectors. The New Frontiers in Technology, or NFT Act, seems like a solid starting point, and I'm glad to see Rep. William Timmons and others pushing to get it included in the Financial Innovation and Technology for the 21st Century Act.
Absolutely, and it's not just about NFTs themselves, but about the broader implications for the crypto industry as a whole. If we can get some clarity on the regulatory front, I think we'll see a lot more innovation and growth in the space. But what do you think are some potential roadblocks to getting this bill passed?
Well, as we all know, politics can be a slow and messy process. I think one of the biggest challenges will be getting everyone on the same page. There are a lot of different stakeholders involved, and it's going to take some serious compromise to get a bill that everyone can agree on. But if it happens, I think it could be a major game changer for the industry.
All right, so let's take a step back and look at the key takeaways from today's stories. We've got Riot Platforms crushing it in terms of Bitcoin production, despite the odds being stacked against them. And we've got some promising developments on the regulatory front, with the potential for increased protections for NFTs.
And looking ahead to the market, I think we're in for some interesting times. Bitcoin difficulty is set to hit an all-time high, which could have some serious implications for mining companies. And if we do see some regulatory clarity, I think we could see a surge in innovation and growth in the space.
Well, that's all for today's show. Thanks for tuning in, everyone. We'll be back tomorrow with more news and analysis from the world of crypto.
And don't forget to follow us on social media for the latest updates and insights. Until next time, stay crypto.